Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, I'm David Bourne, and I'm reporting my top stock pick of the week from my remote location in Rancho Mirage, California. I'll also be joined by Shiraz Mian a little later from his home in Chicago. So my pick today is Virtue Financial, and it's specifically because of the current environment. Now, the financial markets have been in turmoil for the last month or so. We've seen volatility spike, we've seen equity prices dive and recover, energy, commodity, everything has been in a significant volatile period. Now, how would you like to own a business that actually makes more money, and in some cases, a lot more money during periods like that? That's Virtue Financial. So it's an electronic market making firm, founded by a couple of really heavy hitter old traders, and with the backing of Silver Lake Partners, one of the biggest venture capital firms in Silicon Valley. They trade on 235 exchanges or venues, and they trade about 25,000 separate financial instruments. And they trade all day, every day, provide deep liquidity to the markets, and generally take a very tiny profit out of virtually every trade. They make a tiny bit more on everything they make than they lose when they lose. When they filed for their IPO, their S1 revealed that in the previous 3.5 years, they had exactly one losing trading day. Pretty remarkable. Now, I happen to know from experience that market making firms, in times like these, tend to grow their profits virtually exponentially. Right? So picture that during normal times, there's a normal bid-ask spread, and they're collecting a little bit of it every time they trade. During times like these, the bid-ask spread grows a lot, and they get a huge multiple of their bid-ask spread. So there's a lot of stocks right now that are supposedly defensive. Retailers, people that sell consumer staples, utilities. These are things that people continue to, businesses people continue to frequent and make money even during the rough times. Market making firms can accelerate their earnings in a huge way during times like this. And this is your opportunity to own one. Now, you've heard the term HFT, high frequency trading, and it sometimes gets a bad rap, but it basically just means applying the principles of technology and smart algorithms, trading logic to the financial markets. And that's what Virtue does. Now, even after a little bit of a run up recently, it appears to me like the markets don't fully recognize the potential for a big earnings beat in Virtue. They're still trading at less than an 11 multiple on forward earnings, and they pay a 4% dividend. So if you're like me and you've got a portfolio of mostly the steady large cap stuff and a little bit of speculative stuff, Virtue is actually a pretty sensational hedge for your portfolio because they're going to make money exactly when the other companies are struggling the most. So I want you to take a look at Virtue Financial today. That's my top stock pick of the week.
Thanks, Dave. My stock is Walmart, and I don't have Walmart as a defensive play given these conditions, even though it has performed impressively in this downturn for good, understandable reasons. If we look at the year-to-date performance, the stock is up about 3%, and we know how the S&P 500 has done. Some of its close peers, Costco, also Dollar General, have performed in the vicinity of Walmart. But the reason I like Walmart is that even though it's currently rated number 3 or hold on the Zacks rank, is its long-term growth potential and its positioning in the new retail environment. And what I mean by that is that for a very long time, everyone was thinking that the retail world, particularly the brick and mortar space, will go the way of the dinosaurs, and the space will be entirely dominated by Amazon. And I have been of the belief for some time now in fact, the last 3 years, that Walmart, with its experience and capacity in the traditional realm, and then its new capabilities in the online space position it as offering a very compelling competitive response to what Amazon has produced to the space. So Jet.com was a major purchase in bulking up Walmart's capabilities. Then it bought India's Flipkart. The Flipkart purchase hasn't really panned out as much, but it's a long-term play for Walmart in that key market. And uh, as we have seen, and as consumers have seen, in the variety of propositions through the online space that Walmart has been able to implement, it appears that Walmart is here to stay and thrive, perhaps at the expense of many other players, but it can hold its own to the Amazon threat a lot better than many people likely give it credit for. I think financially, Walmart is in excellent shape. Obviously, the earnings outlook in the current environment is mixed in the sense that on the grocery side, it's literally killing it. But many other businesses likely are suffering. International is likely suffering. International accounts for about a quarter of Walmart's business. But in the long run, the opportunity lies in the online space and the company's ability to leverage its physical footprint and integrate that seamlessly with the online offering. So I see Walmart as a compelling long-term growth opportunity. It pays a good quality dividend too. The stock isn't cheap by none of the conventional valuation measures, but I think this solid blend of defense and growth puts Walmart WMT in a unique position relative to many others, both in retail as well as beyond. That's why I have Walmart in the focus list portfolio and have long been a fan of the stock for the long run.